Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club, presented by myself, Phil Carr, for the 9th of March 2017. So during the live session today, we will be covering live market analysis. We will be going through a watch list of trading opportunities, a forecast of where we see gold, silver and crude oil heading next, answering questions, providing live support, and of course, we will also be covering our top trades of the week. Now, we will keep it very interactive, guys, so any additional questions, any comments, feel free to post those during the course of today's session. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal, and our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldandsilverclub.com. Now, before we go over and have a look at the charts, we'll just take a bird's eye view of the markets and see how they have performed over the last week. And immediately you will notice the amount of red that we have on the screen at the moment. So we've seen a lot of markets pull back over the last week, which we've taken advantage of by selling short into the market. So WTI crude oil has now broken down over the last week over 7%. Most of that move has happened since yesterday. So within just around approximately a 24-hour period, we've seen oil break down significantly. We'll have a look at WTI crude oil, also Brent crude oil. Over the last week, we've also seen over a 4% move to the downside on sugar. Platinum, silver, and gold have all pulled back as well. Silver pulled back over 3% in the last week. We've seen platinum pull back 4.4%. Corn, cocoa, wheat also pulled back over the last week, and gold, of course, down about 1.79% at the moment. And in contrast, we've seen a surge on the US dollar, which has put no doubt pressure on a lot of commodities. So overall, we've taken advantage certainly of pressure on oil, so WTI crude oil in particular, which we've maintained our sell short position on, and we have been rewarded on that position now, hitting our profit target today at 49.50, which we'll have a look at the charts of you very shortly. Also capitalized on the gold sell short over the last week via both gold euro and gold US dollar, which we'll have a look at. And we'll also have a look at new trade setups that we see coming off the back of Mario Draghi's speech as well. Okay, so we'll take a look at the charts. So with that, we'll move over to the markets. And first of all, we'll bring up the oil chart. And oil, I'm pleased that we've actually taken our profits here on the drop just above the 200-day moving average today, because we're seeing quite a fast retracement. So we've come out of our sell short here for $49.50 at $49.50 per barrel. We've banked on this trade 325 points from our entry at $52.75. Now, those of you who've been following us for a while now on the weekly reports here will be quite aware that we've maintained our bearish stance here on oil. We've been looking for a breakdown in price. We've seen a lot of attempted rallies on oil, which have fizzled out. And essentially, we've seen a number of rallies get sold into over the last few weeks here, over the month of February. And we've had no follow through here above that overhead key level of resistance on a closing basis. So we talked about this, that a number of times oil had broken out to the upside on the weekly chart, but because there was no conclusive close above the major resistance, which was sitting at $55 per barrel, unless we would get a close above that level, we would not initiate a long. So you can see here where several traders would have got triggered into these trades. In fact, we know the net long position on this market from the hedge funds was at one of the all-time record highs, and as such that really left the downside very vulnerable because there was a lot of money on either side of this trade. So any major changes in price structure, if we were to see a break of support, could lead to very fast moves. And of course, we've seen over a 7% move here since yesterday on oil, just within a couple of days. So overall, very pleased that our trade has worked out. We've banked profits on this. We've been holding on to ourselves for a while now, just taking advantage of the overall decline in prices now over the last week. You can see here where in particular this pennant formation that we've had over the last week got broken down from just yesterday, in fact, was the major catalyst for this. It was interesting because on Tuesday we saw another attempted rally and that got sold into again here. So we broke out above the last few days worth of highs, again a false breakout, and then developed into a bull trap essentially, so trapping those who would have got into that prematurely for a buy. Then you've got this pennant formation, overhead resistance channel that oil has been unable to break out from. It's come back for a revisit of the lower end of the trend channel, and then yesterday was the day where it's broken below support. That was actually a fresh setup. Even if you didn't have any previous trades on oil, you could deduce from that setup that you've got a pennant formation. You've also got a reversal here in the market. You've got a lot of moving averages providing resistance there, and all we really needed to do here was crack through the mother candle, crack through the trend line, and get a close below support. And that really opened up the oil market for significant moves to the downside. Now, where it has found support at the moment, you can see it's almost capitulating right now, just above the 200-day moving average. So we're getting quite a fast retracement. In fact, if we have a look at this from the lows here, yeah, it's already retraced over a dollar move, over 114 points so far. So at this point in time, we're actually flat oil now. So we've closed out of our trade. We've taken a very quick profit on this because it's just broken down yesterday and then hit our profit target today. So essentially 52.75 down to 49.50 has resulted in 325 points on the trade. So now we're waiting really for the next move, how oil is going to react after today's breakdown. Is it going to hold this big rejection candle on the daily chart? It is potentially a bit of a buy zone around this level, around the 200-day moving average, particularly as the overall primary trend remains up. The 200-day moving average is very clearly slanting to the upside, and it is a major zone. If you go back on the chart, I can just identify this and just show you in terms of the levels here that we've come into at the moment. We'll just make sure, put this onto a horizontal, and I'll just bring that out. So the 49.50 zone, certainly if you go back on the chart here, it has held significance previously, which is why it was also a profit target. And you can also see previous levels of resistance have also been supportive over the last few months. So possibly we will get buyers coming in around this zone. If we hold this rejection candle on a daily closing basis, we could see just some consolidation and retracement around this level and potential for a reversal. But it depends on how we close the week out for here for oil, because oil is very clearly now come to a decision in terms of this consolidation, and it could still rotate all the way back down to the lower end of this channel before getting supported in a big way, getting traders interested in a long position at the lower end of that zone. So right now, flat on oil, awaiting to see how this closes today, awaiting to see how it closes the week, waiting for the next trading opportunity. Well done for those of you if you did catch the sell short here. It's been very profitable and quite a quick trade. Moving over to Brent crude oil, very similar situation. So that was US oil or WTI crude oil, broken through the pennant formation. Very clear setup, in fact, on this as well. Oil loves the pennants. It loves to break out from these pennants. In fact, we identified this previously, these pennant formations on Brent here. So a pennant going back to the September OPEC meeting, which then caused a significant breakout to the upside, 6% in one day, and then over 10% in a week. And then the OPEC meeting going back to the end of November, beginning of December. Once we had a resolution, we broke out of the pennant. We had in one day, it was a 10% move and then a 16% move over the course of the week. And now that we've been consolidating within this pennant here a long time on oil, going back to the beginning of December. So essentially, we've been just consolidating on oil now for 3 months. And now, of course, now we've had a resolution. It's been a 7% move in just a couple of days here. So quite significant moves here. So we'll see whether this sentiment continues to the downside, whether we continue to break down. In order for oil to break lower in the coming days, of course, what we'd look for would be a break below today's low, continuation pattern, lower highs, lower lows, and just a continuation of this pattern until we see buyers come back into this market. But today's close will be important as well. If it produces a very solid rejection candle, a capitulation on the daily chart, which would essentially look something like this, if it was to produce a hammer into the close here, then that could actually mean that we just put in a short-term low and oil has reached the level it needed to pull back to in order to get higher again, in order for oil to be able to spring back and get to higher prices. So that is what we're looking at on both Brent and WTI at the moment. Now, moving across to gold, and I will point out a few factors here on gold. Now, first of all, gold, we've been breaking down over the last week. Again, as we mentioned last week on the weekly reports, is that you wanted to have gold euro on your radar. If you're shorting or if you're going long gold against the US dollar, make sure that you're aware of what gold versus the euro is doing, because gold versus the euro gave us the signal to sell gold versus the US dollar early. In fact, we shorted both, but gold versus the US dollar was also quite lucrative alongside gold euro. So gold euro last week, in fact, into the close on Friday, it closed back below the 21-day moving average, closed back below a couple of days of lows here. And you can see here, this was our point at which we could see confirmation to go for a short. Overall breaking down, came back up to the upper end of the trend channel. Over the course of this week, we've seen lower highs, lower lows, broke through the 200-day moving average on Tuesday, and we've subsequently broken through the 50 MA today. Looks like we're coming back to revisit the lower end of this trend channel as well. So whilst the overall sentiment is remaining bearish on gold versus the euro, it's also having a similar impact on gold versus the US dollar. These two track each other very closely. Whenever there is a disparity between gold euro and gold US dollar, which is what we had into the Friday close last week, it's typically gold versus the euro, which is actually showing us the true direction where gold versus the US dollar will be heading next. As such, we took a sell short into the close on Friday, and there was an opportunity to enter that on Monday as well at 12:35 here, where we got a break and a close below this supportive trend channel. And even though it was a hammer into the close, by the way, we still had enough confirmation to go for a sell short, and we sold into that 12:35. Over the course of this week, we've come back down, hit overall support here, the monthly pivot, some key moving averages, and also the 38.2 Fibonacci retracement level. Hit our profit target on gold versus the US dollar here as well. Now, right now, this is quite a key level. So if gold cannot get back above this level of resistance, so essentially if gold can't close back above 1209 to 1210 today, it does definitely open the door up for lower prices, because there's a lot of clean air for gold to break down lower. Overall, I'm bearish on gold short term right now. I'm looking for lower prices. I would suspect that, especially given the overall price structure of the US dollar over the last week, it's just retraced back towards yesterday's low here, but we'll see if this continues to follow through or if it just gets bid back into the close. It has found, in fact, the US dollar overhead resistance at the 102 zone, which is quite important for it to be able to breach and break higher above that level in order to create more short-term momentum for gold, silver, platinum, for example. In its inverse correlation, US dollar strength would create weakness in gold, silver, platinum. But right now, the way gold is looking, where it's closed below quite a major level here, it really does open the door up for it to come back down towards the 1185 swing low. I'd look for initial support around the 1200 might provide some support because it's a psychological round number. Below that, I'd look for a revisit of approximately 1193, which is the 50% Fibonacci level from the swing low. Depends where you're drawing your levels. You could draw it on the closes or you could draw it on the swing low. If you look at it at the closes, it's basically 1195. Around that level would be the next supportive layer. And then below that, I'd look for a revisit of 1185, taking us down to the 61.8 Fibonacci retracement level. So overall, I'm biased for gold to break down here. From a risk to reward perspective, ideally you would have got into gold earlier on during this move. Getting into it right now, in terms of where you put your stop loss or where you put your take profit, it depends on your strategy on this, whether you're trading intraday or swing trading at the moment. But essentially, I am looking for this momentum to continue, especially given so far today it looks like gold is not going to have the legs to get a break above the overhead resistance at 1210. So I would expect a slow and steady move and a move back towards the 1190 zone and then coming back to 1185 swing low. That's what I'm looking at short term. The wild card as we go into next week, which could be a turning point for gold and also silver, which we'll have a look at next, will of course be the FOMC statement. We've also got non-farm payrolls coming out tomorrow as well, so you need to be a little bit careful of that volatility. The ADP numbers which came in yesterday were the best in years, and as a result, the US dollar spiked, gold broke down, managed to break below support at 1209, which has led to the close yesterday. And now as we go into next week, a lot of eyes will be on tomorrow's non-farm payroll numbers as to whether they come in also well over expectations, because if that happens, it of course puts the Fed in a stronger position to go ahead and increase interest rates on next week's FOMC statement. So we'll be watching that very carefully indeed to see what is the result of the non-farm payrolls tomorrow, what the Fed does next week. We've got the Dutch elections next week as well on Wednesday, so we're due some volatility. And I would look at next week as either an acceleration point for gold here to continue to break down, or a turning point. So I would expect the Fed next week, their action to either cause gold to continue this slide downwards, or of course if they don't go ahead and increase interest rates, that could be a turning point here for gold as well, where we see the next leg up and it gets supported. It just depends where gold is sitting prior to the FOMC statement next Wednesday. So we've got today's session where I would expect overall momentum and sentiment on gold to go down. I'd be targeting at least about 100 points lower today on gold. I would expect a revisit of 1200, if not 1195, over the course of the US session today. Then as we go into tomorrow's session, we'll see what impact non-farm payroll does. If non-farm payroll comes in way above expectation and the US dollar flies to the upside, we could see gold again push lower there, have another retest back down to 1185, 1190 to 1185, and then we see where gold is settling as we go into next week. I think at the moment, my bias is for the downside on gold. I'm looking for lower prices at the moment. If we go over to silver and just look at the price structure, silver also, I mean, it's had quite a significant breakdown over the last week. This was really the catalyst for the move lower, this big bearish engulfing candle on the daily chart, which then continued to follow through to the downside. Overall, silver last year in 2016 was very erratic. You would get these big upward days followed by substantial down days where often you would give back the gain. So silver would have three to five up days, and then it would very quickly give back all of the gains. And you had to be careful and fairly nimble with silver last year, depending on which side of the trade you were on, whether you were shorting or going long. But particularly if you were going long, you needed to be very careful protecting your stops and also taking profits when they were due on that trade. Overall in 2017, it looked like the overall uniform rally that we had over this year was starting to change the overall structure of silver. However, last week was back to usual, really, in terms of the way silver broke down very quickly. It meant the traders who'd been in a position from about $17.50 per ounce here, they gave back majority of the gains. So about 2.5 weeks worth of gains were given back in one day if you happen to have been long there on silver and not protected your stop appropriately, not trailed up your stop loss or not taken partial profits. You would have given back the gain very quickly. And in fact, the move that we've had over the last few days puts silver back towards the levels that it was going back towards the end of January. So wipes out literally all of February's gains there. If you'd been long silver, for example, from February, beginning of February to the end of February, you would have wiped out those gains if you'd not had a protective stop or not taken partial profits over the course of this pullback. Now, of course, it could be that we do get supported soon on silver. I'm looking at the following levels. I'm looking at just taking the high to the low into account, or low to high from 20th of December approximately up to the swing high. The 50% level sitting around where we're getting close to it at the moment, at this level around $17.10 per ounce. Below that, the next major levels, if we breach through 50% level, I would look for the 61.8 and the 76.4, which sit at $16.70, and also approximately $16.30 or $16.40. So these are the next levels. I would suggest that, yeah, these three levels are the ones you want to look at, and we need confirmation. So what does confirmation need? You need some sort of a setup at this level. You need either a break and close above the previous day's high, which is unlikely to happen here because we need first of all a rejection candle, so some sort of rejection to form into the close, which would be along the lines of the rejection candles that formed going back like this here. So essentially some sort of hammer candle on the chart here as well, which would indicate that the downward trend is stopping. Until we get that, my bias is to the downside for silver. And whilst it continues to break down lower highs, lower lows, lower closes, the overall sentiment is down. But as soon as it finds support at one of these key levels, the Fibonacci levels is what I'm focused on the most at the moment, and the monthly pivots here. But as soon as it comes down to one of those levels, we would look to then reverse and look to go for a potential long, depending on the price structure, depending on the backdrop of fundamentals as well. If we go over to platinum, platinum's also had quite a significant move to the downside over the last week here. So if you have a look at the price structure of platinum here. It's also broken down, broke below the 50 MA. Also, the 100-day moving average gave way yesterday. So this has had quite a significant pullback. Again, very clear rejection candles here at the top of the market. More recently, same as gold in this sense, that both of them topped out around the same time when gold hit the 200-day moving average and found resistance at 1263. So far in terms of the silver move, it's the platinum move, excuse me, it has moved. Let's just draw these levels on. Hold on. Move these Fibonacci's and we'll just draw a fresh set on for you. Yeah, it's around at the moment it's come down to 61.8 level on a closing basis. It's approximately, yeah, it's around that level at the moment. So right now could still see more downside for platinum. It's certainly not a buy just yet. We could get a revisit of approximately 920 US dollars per ounce here at that point. Possibly that could be a supportive layer. 76.4 is a very common level for platinum to get supported at. Also silver as well. So I wouldn't be too surprised if we got a bounce at that level. But right now I would be careful about entering into longs. Trying to pick up a bargain at the moment on gold, silver, platinum is a little bit risky. And it's not the wrong idea. It's the right idea in a sense to be looking at those markets for potential opportunities to go long, because platinum, silver, palladium have been the best performers up until last week. Actually, silver was the best performing market of 2017, up 15%. But of course, it's had quite a dramatic sell-off here, almost a 50% correction from the lows to the highs for 2017 so far. So keep an eye on them. Definitely keep monitoring them. Next week could be a major turning point here as we go into the FOMC statement. So we'll be watching that very carefully next Wednesday to see what happens during the course of that statement, whether the interest rates do go up or not. Also, from a seasonal point of view, it's not really too much of a surprise here as well to see them pull back. Gold, silver, it's very typical over the month of March. If you look at historical charting going back 5, 10, 15, and 30 years, over the month of March is normally not a positive month for the precious metals. So if you do trade gold or silver, just bear that in mind. It's following its normal seasonal tendencies. It's done that over the course of January and February with the January effect. That's followed through to February, which is what you would expect. What we discussed last week occurred as well. We hit the 200-day moving average spot on, which we've been targeting, hit our profit target for our long at 1262, then reversed position at the end of last week, took advantage of a sell, came back down to the next major level of support, which is currently around the 38.2 fib level. And at the moment, just in summary, I'm looking at lower prices here for gold, guys. So I'll be careful if you're trying to pick up a bargain on gold right now. If you're trying to get in at lower prices here, we haven't got enough confirmation, in my opinion, to go long right now. I expect more downside here in the short term into non-farm payrolls tomorrow. But then non-farm payrolls, it could be a catalyst for a potential change in trend or the FOMC statement next week. But if the job numbers come in way above expectations, we could well see quite a significant surge on the US dollar and a considerable pullback further on the metals. So it's been a very profitable week so far. Certainly gold hitting the profit target last week, reversing position, selling it short, also hitting our profit target on WTI crude oil today as well has been good. So of course, if you would like to get more of this analysis on a more regular basis, you're very welcome to make an application to join us at the Gold and Silver Club. So you can, if you like the analysis you saw today, you can get this during the week, and also you can get this at the weekends as well, as we do our reviews for the week ahead. We plan for the week ahead. We provide all of our traders with the exact levels that we're getting into, including entry, exit, take profit. To get exclusive access to our private members live trading room, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. So it's www.jointhegoldensilverclub.com. Just to give you an idea of our portfolio performance over the last week using our research-driven strategies. So we capitalized on the crude oil trade where we've banked profits now, 320 points profit. We've come down and hit 49.50 today just before 11 o'clock GMT, which was perfect to come down and hit that level so quickly after the breakdown in price yesterday. Also gold euro, so we capitalized on the breakdown last week after we had confirmation on Thursday. We sold this market short, come back down to support here for 280 points profit. We also sold gold versus the US dollar as well. And natural gas, we've just caught a short-term retracement here. May not be a complete change in trend, but certainly in the short term, we had major support, oversold condition, just took this bounce back up for 210 points profit. Okay, excellent. So with that, If you would like access to highly profitable live trade ideas shared with you, ready to implement for instant results, again, you can join us at the Gold and Silver Club. You will get access to our live trading room webinars during the week. These are recorded as well. So if you happen to miss a live trading room, you can rewatch the live trading rooms as well. You get notifications via email and SMS, so you're not missing out on every trade that we're taking, notified on entry, exit, take profit, the whole life cycle of every single trade. You also get commodity research and market insights. So that's our exclusive proprietary research and market insights to help boost your win rate and make sure you're getting on the right side of trades. And you get the following. So exclusive weekly live trading room webinars, live trade setups ready to implement for instant results, notifications via email, SMS, so you're not missing out on profitable trades, details where to enter, exit, place a stop loss, a weekly trading plan with a watch list of trade ideas for the week ahead, live support to help you through each trade, and institutional level trading research and commodity insights to give you the ultimate edge in the market. So again, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. So with that, I wish you all good trading. I wish you all a profitable day, guys. I hope you enjoyed today's session. Very much look forward to work with those of you who will be making an application to join us at the Gold and Silver Club. And I wish you all the best and have a fantastic weekend. Okay, thanks, guys. Thanks again to FX Street, and we'll speak to you all real soon. Take care, everyone. Bye-bye.